first here, Hester Pierce expresses strong support for crypto spot ETFs and regulatory structure. At a conference hosted by the Conservative Libertarian Federalist Society titled Regulating the New Crypto Ecosystem, Necessary Regulation or Crippling Future Innovation, SEC Commissioner Hester Pierce offered some of her strongest criticisms yet of SEC policy. In her remarks, Commissioner Pierce argued that overregulation of the crypto industry could stifle innovation and harm the economy. Pierce suggested that the SEC's attitude towards the crypto market indicates a refusal to engage, and that the SEC's refusal to approve a spot-traded Bitcoin product shows the agency's determination to hold everything related to Bitcoin to a higher standard than other products it regulates. I don't necessarily agree with that. In a recent interview, SEC Commissioner Hester Pierce discussed the agency's decision to deny a Bitcoin exchange-traded product, or ETP, proposal. Pierce pointed to an ETP disapproval order issued last month as an example of the SEC's standard denial rationale, demanding a higher level of resistance to fraud and manipulation than those to which traditional markets are held. It is difficult to see how approval can be gained, Pierce said, and the agency's position becomes more entrenched with every disapproval. Pierce went on to say that the SEC should care about what investors want. Pierce continued this line of thought as she considered those who do not want to see cryptocurrency dragged into a traditional financial regulatory structure. She countered that the concern for liberty and personal autonomy that drives people to prefer fiat to fiat ought to cause them to reject a government that arbitrarily limits people's investment options. And linking the SEC's resistance to approving a Bitcoin spot product, Pierce drew attention to general unwillingness to create a regulatory infrastructure for crypto. She pointed out a variety of initiatives that have been suggested to move forward with regulation. At the event, Messari co-founder and CEO Ryan Selkis, Center for American Progress Director of Financial Regulation and Corporate Governance Todd Phillips, and Coin Center Executive Director Jerry Brito served as panelists for the ensuing discussion. I've said this once, I'll say it again. I've said this many times. People should be able to invest in what they want to invest in. They know the risks. They can make the choices. We will continue to update you on crypto regulation as we get news. Up next here, Three Arrows Capital has failed to meet margin calls. A Singapore-based venture firm, Three Arrows Capital, or 3AC, has reportedly failed to meet margin calls from its lenders. This has raised concerns of insolvency after this week's crypto market collapse triggered unforeseen liquidations for the company. Crypto lender BlockFi was among the firms to liquidate at least some of 3AC's positions, according to the Financial Times. Citing people familiar with the matter, FT reported that 3AC had borrowed Bitcoin from the lender, but was unable to meet a margin call after the market turned sour earlier this week. The recent issues with 3AC have had a ripple effect, causing problems for FinBlocks. This Hong Kong-based platform allows investors to earn yield on their digital assets, but due to concerns surrounding the venture firm, FinBlocks was forced to reduce its withdrawal limits on Thursday. According to various estimates, 3AC likely incurred $400 million in liquidations across multiple positions. The company had significant exposure to Terra, originally Luna, now LUNC, and also held large positions in projects such as Solana and Avalanche. As Cointelegraph reported, 3AC has spent the past few days moving assets to top up funds on various decentralized finance platforms, most notably Aave. It has been speculated that the recent mass liquidations were triggered by the collapse of Ether, which plunged toward $1,000 en route to its lowest level since December 2020. It is also possible that 3AC's exposure to synthetic assets, such as the Grayscale Bitcoin Trust and Lido staked ETH, was responsible for the events. There have been rumors in recent days that 3AC may be insolvent. This was started by a tweet from the company's co-founder Su Zhu that said the company was working with relevant parties to resolve its issues. So there you have that. Up next here, Swiss luxury watchmaker TAG Heuer introduces NFT-enabled smartwatch. This is really cool. Watchmaker TAG Heuer has partnered with the well-known non-fungible token community surrounding Bored Ape Yacht Club and CloneX to create a smartwatch that displays NFTs and connects to crypto wallets such as MetaMask and Ledger Live. This smartwatch allows users to view their NFTs directly on their wrist and also interact with them using Ledger Live, MetaMask, and other popular crypto wallets. TAG Heuer has announced that its upcoming connected Caliber E4 smartwatch will feature support for transferring non-fungible tokens from a paired smartphone. According to the company, the watch will be able to display static and animated NFT artwork, with multiple NFTs able to be stored on the device at once. Additionally, TAG Heuer stated that users will be able to resize and rearrange NFT artwork within 3 available designs on the watch. TAG Heuer has outlined the current capabilities of their smartwatch in regards to displaying NFT artwork. The watch face is able to crisply display both static images and animated GIFs in a loop. The TAG Heuer smartwatch will be able to connect to the blockchain in order to verify any NFTs owned by the wearer. This innovative new feature was described in the TAG Heuer announcement, which stated that verified NFTs are displayed in a hexagon with a cloud of particles gravitating around the image. This will allow users to easily and securely display their ownership of NFTs on their wrist. TAG Heuer's new NFT functionality will be available as a free update for all Caliber E4 owners through Apple's App Store and Google Play. TAG Heuer is continuing to grow in the Web3 space by utilizing a team of in-house developers for blockchain-related projects. Back in May, TAG Heuer partnered with BitPay to begin accepting payments in Bitcoin and 11 other cryptocurrencies, including several US dollar-pegged stablecoins. NFT watches are not a completely new idea, with Bulgari, Jacob & Co., and others having jumped into the market in recent months. NFTs have been gaining popularity in recent years and have been receiving more attention from the media. In 2021, individual sales of NFTs have reached into the tens of millions, and despite recent market conditions and falling prices of NFTs, sales have reportedly remained steady. I think this is a super cool idea. Definitely interested to check them out. Not sure on pricing. I'll let you guys know if we get an update on that. Also a little bit nervous on the security of that. I'd be interested to know how easily those would be able to be hacked, what they have in place in terms of security. But overall, I think that that is a really cool concept. Up next here, we have the state securities regulators investigate Celsius over withdrawal suspicion. This is hot right now. U.S. securities regulators from 5 states have reportedly opened an investigation into crypto lending platform Celsius Network over its decision to suspend user withdrawals. On Thursday, Joseph Rotunda, Director of Enforcement for the Texas State Securities Board, told Reuters that state regulators in Alabama, Kentucky, New Jersey, Texas, and Washington had been investigating Celsius after the platform announced that it would be suspending all withdrawals, transfers, and swaps between accounts. Side note, I know Celsius is spelled wrong in the banner. We're just going to go with it. You guys know how to spell it, so do I. That's it. Rotunda reportedly called the investigation a priority for the Texas regulator and confirmed to Cointelegraph that the Enforcement Division was looking into the matter of the frozen accounts. The enforcement director expressed concern that many retail investors may need to access their assets immediately but are unable to withdraw from their accounts, which could result in significant financial consequences. According to a recent Wall Street Journal report, 2 firms that had previously backed the crypto lending platform Celsius during a funding round in November 2021 have since indicated that they may not provide additional funds due to potential risks. Westcap Group and Canadian pension fund Caisse de dépôt et placement du Québec led a $750 million Series B funding round for Celsius, which helped the platform reach a $3.5 billion valuation. The report on a possible investigation into Celsius follows these developments. Celsius is reportedly onboarding attorneys to find different solutions to the current financial challenges faced by the company. CEO Alex Mashinsky took to Twitter on Wednesday to say that the Celsius team was working non-stop to address user concerns. The Texas State Securities Board took action against Celsius in September 2021, scheduling a hearing related to allegations that the network had offered and sold securities in the state without registration or permission. The New Jersey Bureau of Securities issued a cease and desist order against Celsius for similar alleged violations of the state securities laws. The value of major cryptocurrencies, including Bitcoin and Ether, has dropped significantly in the last 7 days, causing many crypto exchanges to announce staff cuts between 5% and 20%. This market volatility may have been in response to the losses experienced by these cryptocurrencies. So, my condolences to you if you have funds tied up in Celsius. I know a lot of people are being affected by that. You know, it's really affecting their portfolio. I know there's talks of lawsuits going on, so we'll continue to keep you guys updated on that. Up next here, this Oracle data provider platform has surpassed 4 million nodes since inception. Is it possible to build an ecosystem around an anonymous Oracle network that collects and validates geospatial data? One blockchain firm seems to have gotten the gist of the idea. Founded in 2012, XY Labs and its protocol XYO, built on the Ethereum blockchain, aim to reward participants for providing data that can be used to solve specific problems. There are currently over 4 million nodes worldwide in the XYO network. In an AMA session with Cointelegraph Markets Pro, Ari Trow, founder of XY Labs, explained that the XYO system is based on a special type of payload called bound witnesses. These payloads contain a list of user input data points that are signed by one or more nodes in the XYO network. The data points can be modified to include time, date, and location, and the nodes can sign them to reflect the certainty of the embedded data. The purpose of an oracle is to provide answers with a high degree of certainty. Blockchain technology is used to memorialize these answers and provide transparency into the process of creating solutions by linking to supporting data using immutable hashes. Since its inception, over 77.4 million bound witnesses and 244.7 million payloads have been submitted to the XYO mainnet. In order to ensure security, bound witnesses only share the hashes of payloads while keeping the payloads themselves private. Each node has its own blockchain, and with bound witnesses, those blockchains are linked together and as a whole provide one reflection of the imperfect data of reality. With the Coin mobile application, which rewards users for data collection and production, and the XYO token as a payment channel, a fully functional marketplace is born where users can exchange data for incentives. There are approximately 12 billion XYO tokens with no fixed supply. Token inflation and burn mechanisms will affect its supply side tokenomics. And last but not least here, high-profile Bayc collector denies allegations of wrongdoing brought by DeFi detective. ZachXBT, a cyber detective in the decentralized finance realm, has accused prominent Taiwanese musician and blockchain personality Jeff Huang, aka Machi Big Brother, of misconduct in 10 different cryptocurrency projects. Machi Big Brother is known outside of Taiwan as an avid collector of Bored Ape Yacht Club NFTs and possessed a collection worth an estimated $8.26 million at the peak of the crypto bull market last year. The main focus of the allegations against Huang was his allegedly involvement in the whereabouts of 22,000 Ether raised during the initial coin offering for tokens of Formosa Financial, or FMF, a Taiwanese treasury management platform built for blockchain companies in 2018. After the ICO, the Formosa Financial team reported a quick plunge in token prices due to the cryptocurrency bear market. Jeff Huang stepped down from his advisory role with the company. In 2019, Taiwanese news outlet Block Tempo reported that Formosa Financial merged with the Philippines-based crypto exchange CEZEX and ICO crowdfund syndicate Catalyst. According to ZachXBT on June 22, 2018, just 3 weeks after the FMF ICO, 2 withdrawals of 11,000 ETH were made out of Formosa Financial's treasury wallet. At the same time, multiple executives at Formosa Financial allegedly authorized a share buyback of the company. There is uncertainty regarding the outflows of the said 22,000 ETH. ZachXBT alleged that the funds went first to George Tsai, Formosa Financial's former CEO, and Jeff Huang, and then to wallet addresses allegedly linked to their associates. However, the DeFi detective did not provide evidence to back up their claims as to how the said addresses are associated with Jeff and George. The on-chain data can confirm that 2 ETH withdrawals of 11,000 ETH took place from what appears to be the Formosa Financial Treasury on June 22, 2018. However, in order to establish a connection between a blockchain transaction and a real-world recipient, either additional Know Your Customer or KYC information or that of doxing would be required. In an interview with local news outlet Heaven Raven, Huang denounced ZachXBT's allegations as misinformation. Huang also gave remarks regarding Mithril and Cream Finance, both of which are projects mentioned in ZachXBT's report. Cream Finance has suffered a series of flash loan exploits last year. In order to repay users for their lost principal, the platform has vowed to use protocol fees until the debt is repaid in full. Huang stated that they lost nearly $140 million during the exploit, but afterwards they try to reimburse the clients. He said that Cream is now profitable and he passed on control of the company in November 2020 to Andre Cronje. He added that due to the coronavirus pandemic, he has been staying at home and focusing on non-fungible tokens. Jeff Huang denied the allegations against him in a Twitter post on Thursday, writing that the claims are false and that he would take legal action if the person who made them was not anonymous. So that is all we have for you today. Thank you guys so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.